What do you want people to walk away with from the book?
I want them to feel confident in their investment approach, that they can feel safe in a way.
Hmm.
In investing in stock market, there are ups and downs, but you can still feel safe. It doesn't mean there's zero risk. It just means you feel comfortable with your decisions you made,
Hmm.
and importantly, decisions you made, you're able to stay with them. This 10% return we throw around all the time, it's only there if you're in the market.
Hmm.
If you're out of the market when you have a big run, you don't need any do-overs. There are no mulligans in the market.
Welcome to The Informed Investor, where we break down the latest financial headlines, bringing in research and insights to help you separate the news from the noise.
Welcome, everybody, to The Informed Investor, a show brought to you by Dimensional Fund Advisors, a firm that's bringing science to the world of investing with over $1 trillion of assets under management. I'm Jake DeKinder, and incredibly excited to be joined by our chairman and founder, David Booth. David, it's great to have you in here.
Great to be here. Great to be anywhere.
Great to be
At my
anywhere.
age.
I love that. David, I want to focus the discussion today on a book that you have come out with that will be coming out here a little bit later this year called Stay Calm. And really, this is kind of I'll say a journey of the last 10 to 15 years that you've been focused on around communication.
We realized that the world didn't need another book on how to invest.
Mm-hmm.
It's more how to think about investing. And particularly in today's climate, there's with people with a lot of anxiety, it's appropriate to come out with a book. Stay Calm kind of says it all. We want people to feel optimistic and confident about their investing.
Talk to me a little bit about kind of the process of getting to this point, because again, you and I joke all the time, and I kind of joke with you. I say you're kind of you're a geek, and I mean that in the most respectful way possible. But you did for decades. It's trained at University of Chicago, study under Fama. You launched Dimensional. It's research focus. It's data. But there has been a shift that you've gone through.
Well, yeah, I realized about 10 years ago that if we really want to change the world,
Mm-hmm.
we got to speak to people using their language, not the language of academia. And that's set us down this path. And in some ways, it's much more difficult. I tell people I spent 2 years learning investing at Chicago, and I spent the last 50 trying to communicate it. It's a problem. And when we don't do it right, the people do have a lot of anxiety and stress that they don't need to have.
Mm-hmm.
If people understood better about how markets work, then they'd be more likely to come up with a sensible investment program and that they can stay with,
Mm-hmm.
and stay calm along the way. Yeah.
Why do you think that, in your perspective, why do you think people stress so much about money and investing? What have you seen?
Well, I think people grow up dealing with uncertainty in every aspect of life, and then all of a sudden they have a little bit of money and they want to invest, and all of a sudden the uncertainty overwhelms them.
Mm-hmm.
What people don't realize is, what they've learned about dealing with uncertainty. A lot of those same principles apply when it comes to investing.
Well, that's been a big part of what you've been working on the last couple of years, is connecting these experiences, these life experiences, and the principles that I think make people successful in life that really move directly over to the world of, when you think about a couple of those, I think embrace uncertainty is one that you always sort of come to. And if people can approach it that way with life and with investing, they really can explore their options almost.
Yeah, I think that's really in some ways the beginning.
Yeah.
Is to say, look, uncertainty is what creates opportunity
Mm-hmm.
in life and investing. In life, for sure. We've all had to make, tough choices often, on the spur of the moment. The way to think about it is uncertainty really creates opportunity. People need to focus on the opportunity created by uncertainty in life, how you got ahead,
Mm-hmm.
taking a lot of chances and gotten to where you are. Same way it applies in investing. If there were no uncertainty, that means everything is known for sure. That would be riskless. Then your return would be a riskless return.
Mm-hmm.
It's the uncertainty in say the stock and bond markets that creates the opportunity to have greater returns than you can get from say a money market fund.
Well, let's talk about one of the stories that's in the book, which I really enjoyed reading was your parents and the safety deposit box and the money you found in the safety deposit box, which I think relates to the concept around if maybe uncertainty had been embraced, what that could have done for their wealth.
Yeah, I grew up originally in a small town in Kansas, and my parents never invested in public markets. Of course, things were different back then. Investing was much more expensive. You didn't have market portfolios, and they had the feeling, like a lot of people do, that the game was kind of rigged, that they were outsiders,
Mm-hmm.
and it was the insiders that made all the money and would take advantage of them. So they never invested in public markets. So they passed away, and back in 1985, then we went through their safety deposit box, and then there was $15,000 in cash. I mean, I was stunned. And so I went back and calculated, if they'd had $15,000 at the end of World War II and my dad came back from the war and invested in and got the market return, stock market return, it'd be worth over $1 million in 1985. So I was noodling about that recently, and last year, I go, hey, look, it's been 40 years since I opened that safety deposit box. What's been the experience over the last 40 years? And once again, $15,000, if they got the stock market return, would, after 40 years, be worth over $1 million again. I mean, how cool is that? We all study compounding and the benefits of compounding, the magic of compounding. But when you have a real life example,
Mm-hmm.
it really does hit home.
It does. And as you've talked about many times, the beauty of public markets.
One of the biggest miracles that people don't seem to be as excited about as I am is the miracle of public markets.
Mm-hmm.
You look at the last 100 years, the stocks have done about 10% per year annualized. Now think about that. If in doing a test, you want to, test all kinds of economic scenarios. We've got that the last 100 years. It's hard to imagine better test climate than we've had, starting off with the Great Depression, World War II, yada, yada, high inflation, low
Mhm.
inflation. I mean, we've had almost every kind of scenario, or not every. We've had lots of different kinds of scenarios. Now, so is this time different? Yeah, just like every step along the way, it was
Right.
different.
Right.
And the market, through all of that, ends up providing investors with a 10% return. And it gets better because it's not only important for investors, it's important for companies issuing stock, issuing capital. It's U.S. capital markets have really been a big contributor to America's success.
Mm-hmm.
The ease of raising capital. And, what it basically, if you look on average over long periods of time, then it seems as though, when companies issue stock, they have to set a price low enough that people would get a 10% return. So that's a fair deal to them, fair to the investor. And because it's fair to both sides, then that's what we have a really well-functioning capital market.
Well, I think what you're hitting on too is there's an education piece that's necessary for investors. And I think this book, Stay Calm, does a nice job of educating people on how markets work, how to think about investing in markets. And I want to come back to a comment you made there, insiders versus outsiders, because I really think that's important. In my experience, when I talk to a lot of people, there is an intimidation factor when they think about the stock market. It's the unknown. To your point, some people think it's rigged. But one point that you always hit on is that if the insiders somehow had the information, or they had, quote unquote, the inside track, you'd see better performance with the managers.
Yeah, right. It's yeah, I think it's always good to start with reviewing how markets work. You have
Mhm.
buyers and sellers coming together, and they don't trade unless each side thinks they got a good deal. Now, in today's climate, we have very sophisticated investors on both sides of the markets.
Mhm.
Anytime they see a deviation from a fair price, they're all over it. And we're in an environment where transparency is there's a lot of transparency. People have access to similar information. There's a rule of law. There's some
Mhm.
investor protections. There's a lot of trading volume, so you have price discovery. in that kind of scenario, then you would expect what comes out are fair prices,
Mm-hmm. Mm-hmm.
and that seems to be your best assumption. Or the evidence for that is if you look at the performance of professionally managed portfolios, they don't seem to bear the market. In fact, once the costs are considered,
Mm-hmm.
they seem to do worse. How do you explain that? It's because prices are being fairly set. That's why I say it's a miracle. I don't know when we're going to have the ticker tape parade for markets, but we should.
I see the smile on your face and I hear the optimism in your voice. And that's another thing whether it's the essays that you've been writing for the last decade plus, or really focusing again on this book, Stay Calm, it's a very optimistic message. And I think a lot of investors need to hear that.
I don't think it's optimistic. I think it's realistic.
Mm-hmm.
God, it's hard to imagine markets would work any other way
Mm-hmm.
when you have very sophisticated institutions out there trading with all similar information and very low costs of trading. It's hard to believe it would be any other way. That's so that's why we need to celebrate the markets. There'll be ups and downs, but let's go back to say when COVID hit.
Mm-hmm.
The market drops. So the market has to drop enough so that going forward you have a positive expected outcome. That's people. If they don't have a positive expected outcome, people don't come in to invest.
That's right.
So, it's a little naive to say markets never lose money. Markets react to new information. The point is, at any point in time, your best assumption is you're going to have a positive expected outcome going forward.
Mm-hmm.
Sometimes people think in investing you have to predict where the market's going. Well, that's just not true. People can't predict the market, and even if they could predict what's likely to happen over the next month, new information may come in and wipe that out.
Mm-hmm.
But that's how you got through life. People when they go to college say, "Here's what I'm forecasting how my life is going to turn out. I'm going to get this kind of job. I'm going to get married. I'm going to have." You don't predict these things. You just make a sensible choice for yourself, and be adaptive as you go along, and pay attention to everything around you. People talk a lot about the uncertainty of markets, but there's so much uncertainty in life. It's not even clear that the uncertainty of the market is their biggest source of uncertainty. And dealing with all that is complex, which is why people need an advisor. Nobody can be an expert on everything.
Mm-hmm.
Taxes,
Mm-hmm.
estate planning, so on and so forth. And nobody knows for sure, being a parent, you're a parent,
Mm-hmm.
it's hard to forecast what's going to happen.
Tell me about it.
Yeah. So, it's all about control what you can control.
Mm-hmm.
You're again, being a parent, some things are just out of your control.
They are. That's right. They are. All three got home from camp, and we thought that they sort of had a great experience, and then they're back, and it's like chaos again the day that they come back from camp.
So what life is about and what investing is about is control what you can control
Mhm.
and manage what you can't.
Yeah.
And that's kind of the source of optimism. Markets are doing their job. You're going to get a fair deal investing in the stock market, not on any individual stock, but we're talking about the overall market.
Mhm.
That's, that the evidence on that is pretty overwhelming that you're going to get a fair deal.
And you mentioned this, financial advisors, last chapter in here really talks about role of financial advisor. In your mind, why are financial advisors so important for a good overall investment experience?
Well, it comes back to in the last part of the book, it talks about true wealth.
Mm-hmm.
I think what we're talking about is how do you maximize true wealth?
Mm-hmm.
If you ask people, what's more important to you, family, friends, your health, money. Money isn't at the top of that list.
Mm-hmm.
It's these other things that are important. And an advisor can help look at your overall family situation, your current resources, and your projections and so forth, and can help you put all of that together. The investing piece is kind of the icing on the cake, if you will.
Mm-hmm.
But these other things are equally important.
It's a lot of moving parts when you think about your life, your finances, all those things, and quite frankly, where do you want to spend your time? I think is a big part of it as well.
So one form of investing is investing in time.
Hmm.
How do I want to spend my time today? The constraint is there's only 24 hours. So how can I invest my time to be the most productive? And I can free up a lot of time instead of going home at night and listening to Kramer and pulling your hair out, trying to forecast whatever's going to happen. You know, trust the markets. It's in this era where it's difficult to trust individuals. It's nice to know that the market process is trustworthy.
It's working for investors. Let me ask you this: process of writing the book. I mean, because not a lot of people go through the actual like effort and process of bringing a book to market. What was the process like?
Well, it was very interesting. For one thing, I didn't want it to be a memoir.
Yeah.
I didn't want to be a history of Dimensional.
Hmm.
So I was kind of waiting for the general theme. And, the stay calm is a pretty good theme.
I agree.
And I learned a lot. I ended up taking math in school primarily so I didn't have to write term papers. You take math, you go and you take the exam, you either did okay or you didn't,
Right.
rather than sitting up all night writing a term paper. So my instincts are not as an author. Yeah. And so I did it was a team effort, a lot of people helping me. And the thing I had to learn most was the importance of telling stories
Hmm.
in this. Through the book, there are half a dozen stories that have come out that people seem to like. In fact, most of those stories I really haven't shared with very many people. Because these are kind of stories you just don't, at a dinner party, go, yeah, hey,
Right.
let me tell you about my parents.
Hmm.
let me tell you about my first car or something like that. It's so it was a learning process, and it was actually a lot of fun. And I think the outcome is kind of what I would hope for.
Well, I would agree. There's a lot of great stories throughout. I feel like the readers get to know you, David Booth, as a person beyond all of the great principles and ideas in there about how to think about investing. For those that have had a chance to review it, what's been the response so far?
Well, it's been great. I just had breakfast with a journalist, a big name journalist last week. And he wanted to give it to his daughter, because, she's college age, and he says, I don't think she'll read it, but she ought to. And I love to hear stories like that.
Well, I would agree. From what I've heard in my own experience, very positive feedback on it. I think there's great stories in there. I think we get to know you. There's just tremendous information about how to think about the world of investing. And as you've talked about too, it's not 400 or 500 pages long, which I think actually is really important.
Yeah, right. 150 pages. I mean, you don't want to write a book to reduce people's stress and have it be 500 pages. So it's worked out very well. May I give a sales pitch?
You can do whatever you want.
Hey, for everybody listening out there, this makes a great Christmas gift. How's that?
David, you're still a sales guy at heart.
I can't help it.
You can't help it. Closing out here, what do you want people to walk away with from the book?
I want them to feel confident in their investment approach, that they can feel safe in a way.
Mm-hmm.
In investing in stock market, there are ups and downs, but you can still feel safe. It doesn't mean there's zero risk. It just means you feel comfortable with your decisions you made.
Mm-hmm.
And importantly, decisions you made, you're able to stay with them. This 10% return we throw around all the time, it's only there if you're in the market.
Mm-hmm.
If you're out of the market, when you have a big run, you don't need do-overs, There are no mulligans in the market, So I want people to feel comfortable, feel confident, feel like they can trust the process, and in that sense, feel safe.
Well, I love it. The book is Stay Calm from David Booth. It will be coming out later this year. Certainly, you can get more information on ordering copies of this. And also want to remind you to subscribe to the newsletter from David Booth, staycalminvesting.com, to stay up on all of the information around this. David, great to have you on the program.
Great. Thank you.
All right. Thanks, everybody. Have a great rest of the day.